Hey, CGS investors, it's Monday, November 18th. Hopefully everybody had a great weekend and getting ready for Christmas, I guess Thanksgiving in the States. Anyways, let's take a look at the charts. So this is the weekly chart of the SP 500. This is our long kind of bullish, bearish market trends where we have the market, go from this is our TTI kind of investing signal when the market goes out of favor and eventually turns back into a bullish phase. And so it's trying to protect us because we never know which one of these corrections is going to turn around and become a massive sell-off. And so that's the whole point of this strategy. Here's 2022, allowed us to avoid the big correction and also get back in for this current rally. So understanding this view here, this is the rising tide, falling tide environment, meaning we want to know if the market is bullish or bearish. And if it is bearish, we definitely don't really want to be holding stocks, or we need to take advantage of different asset classes or inverse ETFs when the market becomes bearish and gives us certain signals with our other strategy, which is the CGS strategy. Now, what's interesting here is the market has had a very nice run. It is pushing to new, has been hitting all-time highs. Simply, this is definitely masked by the big tech, the AI kind of push and bubble, which is dragging things up. But if we actually take a look at the equal weighted, the general stock market, which is equal weighted SP 500, the small caps and the micro cap stocks, this is the majority of what the stock market has done. And the big difference here is simply the market in general really is just coming up to potentially a major double top here. And we are in this kind of complacency phase where the market had this, believe it or not, we had a very similar pattern right over here where the market was already starting to break down. All the signs were there for a pretty major bear market, which I was talking back then. Then COVID hit and we did have a flashback bear market, but then the government stepped in and everything just got ramped up. And so now we're kind of resetting. I believe the markets were going to go over here anyway, but now they got stretched and kicked down the road a lot further. And now we're into this complacency move again. This is that complacency move where people think it's the market correction is going to be done and it's going to go higher. Then it goes into a bear market, very similar to 2008. We go into this consolidation, this complacency move, and then the market sells off and we have a financial reset. So we are back into this phase with this giant, great, big, dragged out, more or less, topping phase, a stage 3 topping phase. This, I also believe, was a stage 3. It did have a bear market, but it didn't have the big follow through simply because COVID and all kinds of stimulus kicking things back into high gear. But when we look at this pattern and we look at the overall stage, where I believe we're still in this stage 3 topping phase, which if you look over here, this is a difficult window here. These topping and the bottom phase, very difficult to trade because the markets are trading sideways and choppy. They're all over the place, a lot more random. It's a lot more difficult than a bull market or a bear market, which are generally either rising or generally falling. But in these transition phases, it's a lot more difficult. And so all that has kind of led to where we are right now in terms of our positions. There's a lot of downside potential. There's a lot of volatility that could happen in this market. I believe we're sitting very pretty here with locked in gains, our stops up to our entry prices. We're earning interest on a larger percentage. It's not about trying to make as much as we can in this stage 3. It's about preserving our capital and trying to just inch our way higher with some base hits, knowing that eventually there will be some moves that we can take advantage of that'll generate much larger returns down the road. We just need to survive and protect our capital until then. So that's where we are right now, holding these positions. We've got our target, 12.5% gain if we can get to that on the SPY. Or a trend reversal before that, somewhere in there. The NASDAQ's looking for about a 10% upside move. Or if we don't reach it and the market starts to stall out, we could have a trend exit at a higher price closer to that. So we just need to let this market do what it's going to do. Now, when we take a look at, let me just pull this up here. If we go and we take a look back at the overall markets here, the SPY and the QQQ actually have a couple interesting things unfolding. Short-term wise, we have lime green on our 30-minute chart for the SPY. This pink line here is the 20-day moving average overlaid on the 30-minute chart. So you can see how Price is at this pink line on the daily chart. This pink line is the 20-day. So we're trying to find support here. Lime green on the 30-minute means we're oversold. It's a short-term momentum buy signal. So we'll see if we're going to get a bounce and a rally out of this phase. If we also take a look at, let's just take a look at some cycle analysis. Based where we are right now in terms of this market, we have this type of cycle low unfolding. The last time we got into this, we also had a similar cycle low over here, and we had another similar cycle low over here. And each time was a cleansing environment. We saw the market have a pretty decent run to the upside, or a bounce at least, or like a rally to some new highs. So that's kind of where we're at. Hopefully we're going to see this take place, and we see a bounce higher and start to run into the holiday season. Seasonality wise, we are in a good window here for stocks. If we take a look, we are halfway through November right now, just past the halfway mark, literally on this pullback here. We have a pullback in the markets, and we're pretty much right at this low for November. Over the past 30 years, generally we see the market rally into the beginning in December, and then a little pause, and then a rally into the end of the year. So we do have a rising tide, a bullish environment underneath us still in terms of our long-term investing chart. And we have seasonality uptrend pushing us higher as well, should come into favor. So that's kind of where we stand in terms of the equities markets on that kind of regard. If we take a look at the overall CGS strategy, so this top one here is the SPY, the bottom is TLT, TLT, which you can see how they have somewhat of an inverse relationship. Now, they haven't always been like this. Generally, they are more or less inverse, but we've had a very different environment in terms of rising rates. But overall, we've got the stock market. Money's been flowing into the stock market. Money has been flowing out of the bond market. And obviously, it's very clear, you don't want to be holding both. This is the problem with diversification. If you hold both, you have one going up and one going down, and you end up with a flat return, very poor return. If you have a little more heavy weighting in the stocks, then if the stock goes up and the bonds go down, you'll still slightly create a positive return, which is why they created the 60-40 portfolio. It's like hedging yourself. It's really it's not that low risk of a strategy, but it's as low as a financial advisor, general high-level plan can try to make it work. Anyways, if we take a look at our sentiment chart here on the right-hand side, we actually have some orange bars today, which I like. I like orange bars because it typically means the market is getting nervous and scared. If we have deep blood red, it usually means the market is having a huge cleansing event and it has potential to rally. Orange bars means people are now still nervous, expecting the market to go down, but the market generally goes the opposite direction. And then we have a whole bunch of people and some deep red here telling people we're expecting the markets to continue to break down. And of course, it went the exact opposite direction. And so people all piled in, and now the market is up here. And now we're looking for a little bit of fear, which we're starting to get now with these orange bars. And hopefully, this orange bar is going to trigger another wave of buying. So right now, people are betting on the markets collapsing again. They're nervous. The VIX is rising. Our sentiment chart is telling us people are starting to position themselves in defensive plays, getting out of the market, so money flows and all that stuff. And typically, once the masses have done doing that, the market can continue to go. Now, we don't need 2 weeks and multiple orange bars. It can really just be a bar or two orange that can reset things. But we've definitely been in a much larger correction back in here, creating a lot of extra fear in the market. So there's been a lot more orange in general. A lot of times we'll just see a little bouts of orange and then the market pops, a little bout of orange and it pops. So that's kind of where we are there. Let's take a look over at gold. We've got gold up 1.6% this morning, 1.7, so a nice strong bounce. Talked about this last week, how gold looking very oversold, high volume, lots of panic, kind of selling there, kind of flushing out, and looked like a reversal candle here. Now we're starting to get a bounce, and that's the big question. Is this going to be a rally or a bounce? I believe people will say today is a rally, but to me, the trend is kind of stalled out. I think we've hit the high, and this is going to be a bounce up into the moving averages or potentially a little bit higher somewhere into this level right through here, where we had a previous high, we had a breakout, it came down, broke through it, hit its head. So we could see gold have a nice rally and bounce, or more so a bounce, and it could continue to go lower after that. So we'll have to see. I don't think there's a whole lot of upside potential. It did have a big pullback, so from where it is, there is potential for it to rally 3.5, maybe go back up to these highs, 6.5. So for gold, that is a pretty big move. But in the grand scheme of things, I do feel like it's turned a corner. The monthly chart of gold definitely shows that we've started to hit like this key kind of reversal bar. It opens a little bit higher, runs up a bit, gets slammed. If it closes down here, it is not going to be a good sign for the month, and we could see gold continue to unwind and move down towards this 23, 22. I mean, it could go all the way back down to 2,000, believe it or not, fairly easily during the next market correction. Like when we go into a recession and stock markets fall and everything falls, gold will most likely get pulled down with it. Let's take a look at silver. Silver having a nice pop today, up 2.5%. Again, gold, silver, and miners, they're all the same trade, just they move a little bit differently at percentage-wise and stuff. Again, I think it's going to bounce up and have some upside potential. But again, very, very volatile. And if we look at the miners like GDX, it's up 4% today. Not a huge move compared to, it's dropped 20%. You get a little bit of a bounce there. A lot of damage has been done to these charts. Obviously, we had a nice chart, price channeling its way up, and then it came down and it kind of had a huge gap down under this level, kind of bounced back up, hit its head on it, and had that second half of that move. So this move flipped to the downside. Now it's oversold, looking for a bounce up into the moving averages, maybe push a little bit higher, but overall, some damage has been done to this space. And we played the upside with GLD in terms of on our band strategy, made a little gain there, but overall, we really just want to stick with the indexes and the bond markets, currencies at this point, because we're in this crazy volatile stage 3 phase in the markets. If we take a look over at crude is having a little bit of weakness. It's had weakness for quite a while here, but overall, kind of starting to kind of break and test these lows. There's a lot of lows right through here. We got one here, one over here, got another one here. It is on the verge. If it starts to break these blue lines as horizontal support levels where pivot lows have been set stops, we're going to see probably a pretty strong flush down. And I think we're going to see in the mid 50s for oil very quickly. The pattern has been stair-stepping its way down. It is in a bearish formation. Lots of noise through here. You could see this as it potentially could be a stage 1 if it was to rally again, but overall I believe it's just a big pause before we actually go into a big breakdown, unless there's some big huge change in the industry or wars or something. We could see another rally back to the upper end of this range, but overall it is hanging onto a thread and on the verge of breaking these lines and going down into the probably the $60 mark, potentially down into the 50s. A big mover here today is Tesla. We have Tesla shares up about 8% this morning. Trump talking about how he's going to ease some of the restrictions for self-driving cars. So that's huge for Tesla. Obviously, they're a market leader. Tesla's had a massive run since the election, huge push up. It is starting to get into striking distance of breaking to new all-time highs. Overall, this pattern here could continue to extend up here, and again, I like Tesla. I don't own shares of it other than, it's in the SPY and the QQQ. So we take advantage of it there when it's favorable. But overall, I really do think Tesla has got so much potential down the road. And I am still hoping for a major financial reset and for everything to reset and to be able to get into dividend stocks and companies we want when they're fair valued or hopefully undervalued down the road. But right now, Tesla's definitely getting the attention simply because Trump is in and he's rubbing shoulders with Trump, and Elon is kind of in there to have things kind of work in his favor, which is pretty amazing for him. Business-wise, it's amazing. For shareholders, it's amazing. So it'll be interesting to see how that goes. But that's what's really giving a nice little pop in the markets today is a 8% move in Tesla, doing some heavy lifting with the Magnificent Seven. NVIDIA is down 2%. All the other ones are pretty much up. Meta is down a little bit. But in the grand scheme of things, the market is trying to muscle its way higher. When we look at the QQQ today, we can see it's having a little bit of a bounce and hopefully going to dig itself out of this sharp flush out, this correction here. I feel like this gap and this move down and this spike in volume is kind of a reset. We had a sell-off here, a gap down, we had a elevated volume move, and then the market stabilized and took off. And hopefully that's what we're going to have again in these markets. Last but not least, let's take a look over at Bitcoin real quick. Down a little bit this morning, down 1%. Having a nice chart pattern. It's rallying, gets to the 5-day, rallies, gets to the 5-day, had a nice pop over the weekend. It is on the verge of getting some traction and having another leg higher. It'll be interesting to see where this goes. There's a couple levels we could look at. We could look at this low and this high and this low. This will give us one target. We can also look at another one, which is down here to up here and down here. So that'll give us some ranges for Bitcoin to move up to over the next few sessions. So this was that 618 level that it could move up to. And then, of course, is the next upper end of the range, which is 106,000 up to about 114,000, just based on these two little chart patterns. So hopefully we'll see Bitcoin pop and extend into one, maybe pause for a couple of days, and then pop and push into the next one, and just continue this kind of stair-stepping action. I did share my Bitcoin trade with everybody. That was not an official CGS trade. It's just something I'm trading. Everybody always wants to kind of know what else I'm getting into. So I just shared it as a discretionary trade, traded in a different account, traded with, you have to sell something if you don't have two accounts, sell some bill and to use that capital to move into it. Again, this is a high volatility move. I know a lot of people freak out over a 1 or 2% move against us when we get into a trade. So if that is you or you're still holding TLT, for example, do not touch a Bitcoin trade. It moves 15 to 20% a day. And it's much more than a 1% move. So it's best not to mess with this type of stuff. This is simply a fun trade to take advantage of, just a really nice clean chart pattern, which we've looked at here with the monthly chart is the kind of the setup in terms of massive cup and handle pattern, massive bull flag pattern, and we had a breakout, and the environment is prime for it. We're seeing money coming out of precious metals. It seems to be going to Bitcoin. We've got Trump and the UK looking at reserves in Bitcoin. Everything is favoring those. And of course, when we look, you can see the upside potential here for this to continue to push higher. This is the monthly chart. So who knows? By the end of this month, it could already hit these. It could be a 1 month target. Instead of it taking 3, 4, 5 months to get there, it could happen in 1 month. It's just how you never know. Bitcoin is super volatile, and this is a pattern a lot of people are following, and that's probably why it's taking off. People are getting on board, and people talking about 100K. I think it's going to blast past 100K and hit our target, which is about 108,000, is kind of gauge where our target is. Anyways, that's about it for this morning. A little longer video than normal, but hopefully you found it helpful, and we'll talk to you soon. Bye-bye.